Hello, this is Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. I'm really excited to have Ed Peace from USDA with me today, and he's going to tell you all about the USDA program and how it can help you become a home owner. Ed, thank you so much for joining me. I'm going to allow you to introduce yourself.
Okay, good morning. Thank you, Shaheedah, for having me. And it's exciting. We try to get the word out about the Guaranteed Home Program through USDA. And so my name is Ed Peace. I'm a loan and finance analyst on the national office staff now. I spent 30 plus years in the on the staff in Georgia with USDA, and most recently was the program director for all the housing programs out of our state office in Athens before moving over to the national office. So got 33 years in the mortgage industry with USDA. So.
Okay, great.
Thank you for having me.
Thank you so much. And we have a few USDA videos on the site already. So there's going to be a new USDA video, and I hope you enjoy it. So we have 7 questions, and we're going to get right into it. So Ed, what is the advantage of a USDA loan for home buyers?
Yes, so really the biggest advantage is no down payment. So we finance 100% of the cost of the purchase of a house and the closing costs. We can roll those into the loan as well, up to the appraised value. So that's usually the biggest hurdle a lot of people have is getting over is the fact of having a down payment. And so there is no down payment with USDA loan.
Okay. And talk about that a little bit more, that rolling the closing costs into the loan, because a lot of people are not aware that they can do that.
Right. So say the house appraises for easy numbers for $100,000 and the purchase price is $95,000. So you have between the $95,000 and $100,000, you have $5,000 worth of closing costs that you can roll into the loan so that you don't have to pay it out of pocket, and write a check at the loan closing. It's very convenient and saves a lot of folks their pocket money,
Very, very much so, especially in these times. People are trying to hold on to as much money as possible in this economy. So what are the qualifications? So we know it's 0% down. What do I need to qualify for a USDA loan?
Great question. So everybody we finance, is written into the law that USDA helps those that are of moderate income and below. And moderate is defined as 115% of the median income. And median income means that there's a line drawn right between all wage earners in a particular area. For our instance, it's counties. So there's as many earning above the median income as there are below the median income. So the definition is 115% of median income. So there are areas of the Atlanta, there are counties in the Atlanta area that still have some rural areas in them. So, the income limits are fairly high there. So.
Okay, good. So anywhere around the United States, you have maybe does every state in the United States have a USDA area?
Yes, it does. Okay. Matter of fact, there's probably 95% of the landmass in the United States that is a rural area.
Okay, that's very good to know. So, and let's go back, we missed this at the very beginning. A USDA covers the rural portion. So in order for me to get a USDA mortgage, it has to be rural. So how do I know if the area that I want or I'm thinking about buying in is rural?
That's a great question. So we have on our eligibility website a tool to use that'll show you. You can either plug in an address if you're thinking about a particular house, and it will tell you and show you whether it's in the rural area or not. Or you can just zoom in on an area on that map, and it will show you delineated out what is urban and what is rural. So if you're shopping for a house and you want to use USDA, you can kind of zoom in on the map and see the areas that you need to be shopping in.
Okay, and that's a very good point, like statistic that I wasn't aware of. 95% is considered rural. Who knew?
That's right. So the definition, we can go into towns up to 35,000. So obviously all the big cities in Georgia would be Atlanta, Macon, Augusta, Savannah. Those types of areas obviously have urban areas around. They are urban. So you can zoom in on those areas to see what areas of those particular towns are eligible.
Okay, and we will link all of these websites in the description of this video. Okay, so we talked about that you could roll some of the closing costs into your loan. If you're not able to do that, is there any down payment assistance that can help with closing costs?
Well, we don't specifically have down payment assistance, but there's no prohibition against, maybe a silent second mortgage behind that might help with closing costs, just as long as the lender ensures that they have a first lien, at closing. So
Okay.
we'll guarantee that first lien only.
All right. And I know I have to be moderate income. What about credit? What's my credit score need to be?
Yeah, so a few years ago, it hasn't been all that long ago that we basically did away with minimum credit scores for USDA's purposes on the guaranteed program. So really it's up to the lender to prudently underwrite and use their overlays. Maybe they have minimum credit scores of their own, or maybe the secondary market that they're using has minimum credit scores. So basically we rely on them to underwrite that loan from a credit standpoint.
Okay, so no minimum credit score that you require, but the lender may have something that they require for USDA.
That's right. That's right.
Moderate income. What about debt to income ratio?
Yes, so typically the standard 2941 is generally the ratios. In other words, the front end, what we call the front end ratio, being the 29% of their income, the house payment cannot exceed, house payment, taxes, and insurance can't exceed 29% of the income.
Okay.
And 41% of their income is the limit on, including that PITI, that house payment, taxes, and insurance, plus any other monthly debts that they have, generally can't exceed 41%. Now, I say generally because we have an automated underwriting system that takes compensating factors into account. So if someone has really, is really strong in one area, like been on the job for 20 years or something like that, or they have higher credit scores, then the automated system may allow a little bit higher ratios or house payments compared to the income to qualify. So 2941 is kind of the baseline, but it can be exceeded with certain compensating factors.
Okay, very good to know. All right, so question number 4. So it's really difficult right now in this economy to find a home. Like inventory is so super low. And I know you can get a resale property with a USDA loan, but let's talk about the new construction options that you have. So if somebody finds some land in one of these rural areas and they want to build a home, how could they go about doing that?
Yes, so we have a single close construction to permanent loan program, or actually feature to our loan program that allows them to do just that. So used to, the old way of getting a house built was an individual or couple or family had to find a construction loan, and then the house was built, and then they pretty much, after the house was built, have to find permanent financing to refinance that construction loan.
Right.
Well, with USDA, we can do it all in one loan closing, and the construction loan is closed. Then all the construction process is done. The house is built. The inspections are made. Obviously, the appraisal is done. And at the end of that process, when they're ready to move into it, the lender basically just converts that loan to a permanent loan, and they start making payments. So they don't have to have closing costs associated with 2 different loans. It's just that one loan. The beauty about this particular program is not only is it a single close construction of permanent, but believe it or not, the interest that accrues on the loan after that construction portion is closed, that can be rolled into the loan up front, so that they don't have to make payments, interest payments, while the house is being built and trying to meet rent payments as well. And Shaheedah, believe it or not, they can even go as far, we can allow the principal, interest, taxes, and insurance payment, the whole house payment, to start being made right after that construction portion is closed, and that part can even be rolled into the loan. So we have a couple of different options there. I know it's kind of down in the weeds a little bit, but both those, the interest only and the full house payment, can actually be rolled into our loan, into the lender's loan, and we will guarantee that in order to keep those payments from being so high or being doubled, for them to have to make a rent payment and the new house payment while the house is being built. And again, at the end of the process, they just start making those house payments after it's converted to a permanent.
Okay, that sounds excellent. Like, so I could find a builder, find the land, finance it all in one transaction. Yes. I don't have to make any payments. So I'm still like renting, living in my apartment or living in a house that I'm renting. This house is being built. And so I don't start making payments until the whole thing is done. And are you saying too, I could roll some of those payments, like the first few payments, into my loan?
Yes, the payments will actually be made, but that'll come out of loan proceeds if the house appraises for enough. And generally they have been. So
okay, that's very good to know. Yeah. So I know it's a little bit overwhelming for a first-time home buyer to say, okay, I'm gonna get the land, buy the house. What do you recommend for them to do so they can get some help with this process?
Yeah, so it is it can be a complicated process. We recommend that they hook up with a realtor that is able to hold their hand during the process. I know not all realtors are involved in construction loans and construction processes, but the realtor can really hold their hand and know the questions to ask and seek the answers on their behalf, with that builder. And so, so the realtors on this single close construction feature, the realtor can actually, if there's a small commission on the new construction, they can actually get paid at the closing of the construction portion right up front. So,
well, that's also good to know. So definitely find, if you're interested in doing this USDA single close construction, you need to find a realtor in that area who's familiar with the land, the zoning, all of those kinds of things that can walk you through this, because this, again, could be a huge opportunity for you if you cannot find a resale property. And I'm so happy that you were able to share that. Now, another question I always get, we're on question number 5, is can you buy a manufactured home? And isn't that the old word or the new word for mobile home?
Mobile homes, yes,
manufactured home. Can I buy one of those with a USDA loan?
Actually, yes. If it's a brand new unit and has never been sold and is placed on a permanent in-ground concrete foundation, then yes, they can be financed through the USDA guaranteed program. Okay. Early on, I should have mentioned that we have a guaranteed program, which is the one we're talking about today.
Yes.
The direct program, is a little bit different. They are made by our offices scattered across the nation, and Georgia has about 12 or 13 offices. And those are a little bit different. There are different income levels. They're lower income levels. There's a little bit more restrictions on manufactured homes on that program than there is on the guaranteed program. So yes, as long as it's a new manufactured home and placed on a permanent in-ground concrete foundation, we can finance them.
Finance those. Okay.
In some states, they're actually running a pilot in 22 different states. Georgia is not one of them, by the way, where they're financing existing manufactured homes. I think as long as they're built after 2006, January 1st of 2006. But again, Georgia's not one of those. But they are thinking about doing that throughout the nation, but not quite. Haven't gotten to that point.
So again, check for your state, your USDA area, to see if this is something that they're piloting, if you're interested in a manufactured home. And I do have a video. Last year, I interviewed another USDA representative on the direct program. So if you're lower income, then that might be an option for you. So you can watch that video after this video. All right, so I think we answered the question, are you able to roll payments into the loan? Let's talk about this. How can we find USDA lenders? So, because not all lenders do USDA. So how can people find a USDA lender?
Yes, Shaheedah, I can send you the link where we actually have them listed by state, by all USDA approved lenders. And you can include that in the link as well. That way folks can kind of shop around not only closing costs, but interest rates as well.
Okay. So good to know. And is there another list for the lenders that do the new construction, the single close new construction?
There sure is. And I can send you that link as well.
Okay, so we'll have both of those lists in the description of this video. Was there anything else you wanted to mention?
Well, the difference between the direct programs and the guaranteed program. The direct program, like I said, is made by USDA office themselves, whereas a guaranteed loan is made by approved lenders. And then, so the direct loan is for lower income individuals and households. And those actually can be subsidized payments where payments are based on your income. So payments can actually be lowered. The guaranteed loan, it does not have subsidy. And so a lot of times subsidy is great, but the direct program keeps up with the amount of subsidy that's been paid on behalf of a borrower. And at the end of the loan, whether it's paid off naturally for 33 years or if they refinance it out of the program, there's a part of that subsidy that's due back to the government, to the taxpayers, and as a shared appreciation. So the more that the property increases in value, the greater percentage of that subsidy is due back, is included in the payoff. So contrast that to the guaranteed program. It has no subsidy. So every borrower makes the full non-subsidized payment. But the good thing is there's no subsidy recapture at the end of the loan.
Okay. Where if you were to sell the home or refinance the home, you would have to pay some of that back.
That's right.
Okay.
Right. So the guaranteed housing program does not have any of the subsidy.
Okay.
And it does not have.
All right, so we got some really, really good information. So number one, we know where. You're going to look at the link. You're going to see where the USDA areas are in your state. You're also going to know what lenders specialize in the USDA program and what lenders specialize in the construction USDA program. What is something that you want, America, right, to know about USDA? Because we were talking earlier and said people really don't know. We think about USDA, we think about food and meat and that sort of thing. What do you want, America to know about the USDA mortgage program?
Yeah, so, like you just mentioned, everybody, when they think of USDA, think of meat inspections or farming and agriculture. We're all of that, but we also have the financial piece to it too as well, and where we can finance houses in the rural areas with no down payment. My wife and I built our first house through the guaranteed program years and years ago in 1994, and just a few years after that, we refinanced it. And so, we're a success story in ourselves. Of course, I didn't approve that loan. I wasn't able to approve my loan, but had to go through special channels to get that done. But yeah, so it's a not as well known as FHA, and so the payments. I know that was one of the questions. Was since there's no down payment, people usually wind up borrowing more with the USDA. But the way the fees are structured, even though they're borrowing more, the payments a lot of times are lower than what they would be with any other program, including FHA or VA. Okay. So it's a very affordable loan program for folks in the rural areas.
Okay. Very, very good to know. And it couldn't come at a better time, I think, with people looking for what are my options? Like, what can I do? Because they can't afford rent, right? Rent is going up. Some people 30% or more. And then a lot of the home prices are going up. So people are looking for, other options. So I think it's a great time for a lot of people to consider a USDA loan. Thank you so much for joining me. I really, really appreciate you sharing this information. And again, we'll have a lot of links in the comments. And I love your name, by the way, Peace. You can find peace and tranquility, right, in USDA areas for the most part, right?
That's right. That's right. Thank you, Shaheedah.
Thank you so much, Ed. I appreciate it.
Thank you.